on Tuesday, Warriors. Hi, Craig. Hello, Face. How you doing? To me, it looks like the dollar is going to take a little breather at a little 1, 2, 3 in euro. So I don't know if it's going to be a major turn because we're need some work on the 4-hour, but overdue for some type of retrace. I mean, why can't we rally halfway back at least, back towards 23 or so in euro? Of course, right now it's being led by cable strength. Kind of a similar situation here. Actually, cable looks the same, although outperforming, as you can see on the 4-hour. Very negative readings. But Tuesday, a lot of people, I know if I was short the pound from here or short the euro and wrote it down the last 3 days, be a good time to book. So with that happening, you're seeing the Swiss beginning to fade. But it's not classic because look at these readings. 79, even though we diverge, 76, and that's the 4-hour. So not ideal on the 4-hour, although we're showing it here at this high on the 1-hour, pretty good divergence. So I'd be very careful chasing strength in the Dixie, although I don't think it's over. Look at this move. We could get fib retracements here, back to here, or I'd be waiting for another high. Still think that we're going to make a charge towards this 92 area here, where there's a lot of confluence. I don't think we fail big from here, but we shall see. So I'm looking at Aussie Kiwi, which has had pretty much a straight line move without any corrections. Okay, so on the 4-hour, we're actually diverging here. And I still think there's a lot left. We're cracking through some important moving averages. We got through the 50-day here, not through the 50-week. But this one, I think we're due for this correction. Some people might call this a breakout of some type of triangle or maybe head and shoulders bottom. I think there's a short because I do believe we're going to correct. This is a nice little turnaround Tuesday candidate in my humble opinion, even if it charges to a shade above 107 or so. The first trigger to tell you that a correction might be beginning is this could end up being some type of false breakout under 106.70, and then I'd be looking for fib retracements. A little under 106 is halfway back, 61.8, 580. So looking at this as being a candidate, diverging on both the 1 and 4-hour, this could turn out to be a failing rally. Everyone with me? Okay. Michael's buying dollar pair dips. Okay, I'm not sure. Dollar pair dips. So you're buying dips in euro and cable and all of that? Okay. Hi, Kurt. And something that I just want to show you guys, because sometimes I get distracted and I stop following things and then things happen. And I hadn't looked at the euro pound in a while, and this was supposed to be such a major breakdown. Let's look at the daily. I mean, there were all kinds of, see, we took out these lows, we kind of diverged, but when you look at it on a weekly, if this was such an important breakdown area, what are we doing here? Okay, so if the dollar is going to turn, and maybe it's going to take Dixie getting to 92, this could be a pretty good long candidate, because in true bull markets, euro should outperform the pound, in my view. So I'd be looking for breaks, maybe around 87-ish, 86.80, something like that. And be considering this is a low for at least, maybe this is ABC, and then we get a pullback, and then we get something like this from down here. Give me a Y if you're with me on it. And then we get another rally, and the long shot scenario is that this double top doesn't stand because it's only 2 drives. It looks to me, I've been saying this, I know, for probably a millennium now. But I still think that there's some type of chance for a third drive up here on this. And to me, it looks like the breakdown ended up being a false breakdown. And you don't hear anyone talking about the long side of euro pound anymore, especially with recent dollar strength. So I'd have it on my radar screen. Everyone with me? You don't have to agree with me. I just want to make sure that you're understanding what I'm saying and seeing what I'm saying. So just give me a quick why, or give me a question on any of the things I covered. I think Aussie Kiwi could correct. I don't think this is the end of the move. Okay. And this to me looks like a false breakdown in euro pound, and looking for a breather in the dollar. You've been with me for a millennia? Okay. You're really making me feel old, Bill. I wonder how my buddy Blake, I bet he's not as tired today as he was yesterday, and maybe you could clarify dollar action, euro action. You know, we started talking yesterday about not really pressing the long side of the dollar, and plus, you know, the yen is getting closer and closer and closer to that 109 level, but I still don't see anything RSI wise short term to say, except for, you know, really being stretched. But look at this momentum. Okay, it's hard for me to fade it there, and it's hard for me to fade it here. And the last thing I'm going to talk about is gold. Last week I said gold was not performing with the silver. I think it was Friday. I said, Steve, we're having the gold close lower on the week. So interesting action in the metals. And silver, I still think, because we did not take out the Feb low, that we're heading at least to 1570. So I think there's at least another day like we had yesterday coming. In fact, in the precious metals, what I'd like to do is, to see them go head down into the summit. If Trump has a summit with Kim and they strike a deal, and you know, gold is at attractive levels and silver is, I buy the peace deal. I buy metals on a peace deal. So that wraps up my thoughts. And how are you today, partner?
Doing all right. Dale, how are you doing?
Good, buddy. Today was a little easier to get up.
It was for me. Yeah, that's for sure. How are you doing today?
I went to bed at 6 o'clock, though. No, I'm kidding. I'm doing fine. Doing fine. Looking forward to hearing what you and the rest of the team have. I think Andre may be stopping in for a little bit today.
Awesome. Yeah, I think he is, which is great. You were talking about the yen. This is for me. I've been waiting for a move back to challenge this
trend line,
trend line, and we are doing it right now. So as a result, I'm establishing a short already, and I started actually yesterday. So I started yesterday. I added a little bit last night at 75. So I've got a starting point position.
Okay.
Right now we hit the 127% extension of the last move down. This is where, you know, in this neighborhood is where I wanted to be short, but I have to admit that the dollar yen is very, very strong, and that's a result of the dollar being strong across the board. And even with the dollar kind of subsiding a little bit against the euro overnight, where the euro bounced, you know, the dollar yen is still very resilient. So I don't want to be too aggressive at this point, but you know, obviously I'm starting to stick my toe in the water.
Well, now, you know, Blake, you know, that's discipline. You know, I mean, you waited for the setup. The setup's there. You could always find a reason why not to take the setup once it gets there. I mean, for me, I was waiting for this too. It's just the RSI is just so strong. I have a hard time with the momentum readings I'm getting. But price-wise, you're right. It's right there.
Yeah, I mean it's here, and I I have a problem with getting in a little early, and I started shorting the dollar yen yesterday, I think at 40, and then I added a little bit at 71, and so my cost average isn't great. If I would have just sat and waited for today, I thought there was going to be more of a reaction yesterday, but there just wasn't, because equities are still strong. So while equities are holding up well, that's going to keep the dollar yen propped up. Now I'm a little, I look at the euro dollar and I'm a little nervous about the euro. Well, first of all, the dollar index is breaking higher. It's broken through a year-long trend line, and I think a lot of people don't understand the severity that I put on these big breaks, or they just don't, they see it as, oh, we're hitting 91. I mean, I understand that we're hitting 91. Ultimately, we're going higher, in my opinion. The question is, do we do this first? Oops.
Right.
Let me get this. Do we do that first? And right. that I think is a more realistic expectation. The dollar bounced off this 91 level. We're going to pull back a little bit and then rally. We're going to find some support down here. I would assume, something like this, and then the dollar takes off. And because I believe the breach of this year-long trend line is a big deal, in my opinion. Now the question is, what drives it? And so how far does the euro bounce? I mean, I think the euro could bounce, maybe to 50, maybe to top of this sell zone here. You can see this previous sell zone. You can see how we've been knocking our head up against the lower end of it. Maybe back up to 122.50, 122.40 before resumption of trend. And keep in mind, we still have the ECB meeting on Thursday. We also have German Chancellor Angela Merkel is still visiting the United States and visiting with Donald Trump later on Friday this week. So, a lot of big events are happening that that could still really weigh on the euro dollar moving forward. But what I'm really focused on right now is the dollar yen, and I am selling. It's interesting because I'm actually selling dollars right now, and I'm actually quite bullish the dollar. But I want everybody to understand that I may be bearish the dollar yen, but I'm bullish the dollar. So I'm selectively bullish the dollar. I'm bullish the dollar against the euro. I'm bullish the dollar against the cable. I'm bullish the dollar against the Aussie. You notice the Aussie, by the way, we cracked this is a big, trend line here, and we're trading below it right now, currently. And yeah, the Aussie could bounce a little bit, but all in all, we're trading really heavy here after the Australian CPI. I did an Asian trade. I actually bought the Aussie at 93, and I sold it at 83. I'm sorry, I bought it at 83. I almost bottom ticked the damn thing, and then I sold it at 95 last night. I obviously could have stuck around for more, but I was
for kicks, Blake. Show the monthly. And tell me what you think.
The monthly?
The monthly on the Aussie.
Yeah, we're right on support here.
Yeah,
so.
Does that look like a flag?
Yeah, it does. I mean, and if you look at the Aussie and you go, well, there's no way we're going to trade down at 50 cents again. I mean, we could. I'll tell you, just giving you guys some of my previous experience. When the Aussie dollar was trading down in the 50, 60 cent level back in the early 2000s, like 2001, 2002, this was the most boring currency pair when it traded down here. Our trading ranges were like 30 to 50 pips. I take that back, maybe like 20 to 40 pips every day. It was the most boring currency, and it got really exciting when we were, at parity. It was trading like a really, you know, fun currency pair. But as we, you know, the exchange rate moves down into those levels, it gets a little bit more boring. But I think it does look like a bear flag, and you know, you can look at it on a weekly basis too. I mean, it, you know, we look like we could be flagging. I think that this breach of this this trend line here, you know, could have implications that takes us back down to 70 cents. I don't think that's that is too far off, especially with the way, with how the dollar looks right now.
And a full-blown trade war isn't going to help Australia either.
No, it's not. It's not going to help Australia. It's not going to help New Zealand. So these currencies that are, you know, currently, you know, the Kiwi also, you know, doesn't look all that hot either. You know, the Kiwi looks like we can trade really easily back down to this, you know, 68 cent level. You know, and so that's why I think this dollar strength, you can't really scoff at it. It's something that that if the euro dollar, if you think about the euro, and I'm really mostly concerned right now, not so much where we're at in the euro. I'm concerned about this 120.80, and we break through 120.80, we could trade that back down towards 116, you know. And if we go down to 116, where does that put the Aussie dollar? You know, does that put the Aussie dollar back at 72, 73 cents? And I think that's that is pretty possible in the current environment. You know, I'm not bullish the dollar long term, but I am bullish the dollar near term. And so I do think it's entirely possible that we can see, you know, several hundred pip moves in some of these majors. Again, where does that put the you know, when going back to the US dollar, Japanese yen, I don't know. I think that we have to figure out why the dollar is going higher. You know, if it's going higher from a risk aversion standpoint, you know, the dollar yen might actually sell off. The yen could strengthen as a result. If we're going up because of yields, but stocks are still going higher, then the dollar yen is probably going higher. So you know, it's hard to put our finger on exactly what's going to be driving the dollar higher from here, but I do believe that the dollar is moving higher, you know, whether it's uniform across the board or not. It's been pretty uniform. Obviously, we've seen the pound drop aggressively, the euro dollar drop aggressively, the dollar yen rally aggressively, et cetera, et cetera. So it has been very uniform. I don't know if that's going to persist. It depends on how. And speaking of which, I guess we should take a look at the S&P here. You know, the S&P is actually holding up quite well today, but we are up against some really critical resistance, in my opinion, on the S&P. You know, we are maybe about what were we currently trading at, 87. You know, we're a good 10 handles from key resistance in the S&P. Which I actually think we're going, you know, eventually going to be moving back down into this this wedge. So if we move back down in this wedge, that should help the yen strengthen. You know, the dollar yen would be going down, but the dollar could be going up against other currencies, which means that the euro yen, pound yen, Aussie yen, all the other yen pairs are moving down as well. So I think that's all pretty possible. Hold on really quick. This woman is, I gotta quiet her up really fast.
Check.
Okay. What's that?
Check.
Yeah,
You're giving
check.
She's your generation.
Sorry. Yeah, I guess I am, yeah, aren't I? Okay. So let's take a real quick view of the euro dollar. So one thing that we have to one thing that we do have to pay attention to is the euro is consolidating, working off some very oversold conditions. Because if you look at, you know, the hourly charts, and we were really grossly oversold yesterday on hourly RSI, but you can see hourly RSIs have already come back to you know, the mean or the average. We've already moderated. The 4 hour is still very oversold in the euro dollar. That's why I still think that there's the ability for the euro to bounce like another 30 or 40 pips higher as a result. The pound dollar also very oversold. We're working off the oversold conditions right now, and we haven't seen much of a bounce in the cable, but the pound could very easily see, 140 again as well. I think that's possible. But I guess the thing I should note about the pound is we cracked some pretty key trend lines here. Let me extend that one out a little bit. We broke some pretty key trend lines here that have been in existence since the beginning of the year, and pounds as well as trading pretty heavy. The Aussie had, we found channel support, but we've also cracked a big, daily multi-week trend line too. So I think the Aussie bounces are going to be fairly limited. What I'd be looking for in the Aussie is probably a bounce back to right here to 76.40 and see if we can get a rally back up there to sell into. The Kiwi dollar. Now the Kiwi dollar, this is a pretty astonishing move. I mean, this is a big deal because the the Kiwi market so utterly bullish a week and a half ago. We were rallying right into resistance, and then we turned so sharp from 74 cents, down to 71. I mean, we've had a 300 pip drop just in a few days, and that's from an Elliott wave standpoint, they would call this a if you ask Grega or anybody else that practices Elliott waves, this is a very impulsive move, which means that this move, even though we could bounce, is probably setting the direction near term for the Kiwi. So the Kiwi, and you see how the Kiwi is responding against like the Aussie. You have the Aussie New Zealand. I know you were talking about it a little bit earlier. Look, this thing's above channel resistance now, and it looks bullish. I know you were talking about possibly shorting it here, but I don't know. I look at it like this, Dale. This is a, and I'm not long right now. This is a pennant. Whether you draw it from here or whether you draw it from here, that's bullish. I wouldn't want to be short that thing. I think it's going higher, and I'm not long. I'm just, I'd like to be long. I actually had bids in the market at 106 yesterday, following the Australian data, and it came nowhere to getting close to being hit. After the year-over-year annualized CPI out of Australia actually came in a little bit better than expected. The Aussie actually turned around and rallied. So I think the Aussie looks pretty bullish here against the Kiwi. But that's going back again and just pointing out that the Kiwi. Look at this move.
Wow. Yeah.
I mean, this is a 4-hour chart. I mean, we basically went down the elevator shaft from 73 cents to 71 cents, and it's been non-stop bludgeoning of the Kiwi till we broke through all the support and we actually cleared the 200-day moving average back to the downside, which comes in around 71, 75-ish. So now you looking at the Kiwi, you've got to sell rallies, and that's the thing, is you hope that the euro dollar there's a bounce that drags up the euro to 122.50 that maybe will get the Kiwi back to, like, I don't know, 71.50, 71.60 to sell into. That's what I would hope for. Yeah, I mean, I'm just, you hope you get some sort of recovery here to sell it. So, what were you saying?
A lot of ugly charts we're looking at today, Blake.
Really ugly, especially if you're long the dollar. I mean, or excuse me, short the dollar. I mean, it's pretty ugly out there. Almost universally across the board. Let's take a look at the dollar Canadian. So the dollar Canadian, this obviously exceeded my expectations. I was long, and by the way, this the dollar Canadian, I was very aggressively long. from
when it looked ugly. When it looked ugly.
Yeah, from the end of last week when it was down here, you know, and I got out of my position yesterday at, it was early, at like 127. I want to say it was like before we hit 128. I'm pretty sure I didn't capture the move from 128 up. But I caught a lot of this move and a fairly aggressive position sizing for me. And we came back and challenged the complex head and shoulder pattern. So this validates the idea that I was right all along. And, you know, and I'm not always right all along in these formations, but, you know, some people had, and I'm just going to give you a little bit of a heads up of what other people had. You know, you can go back on Twitter and see some other people how they marked up this this U.S. dollar Canadian. They marked up the head and shoulder pattern like this, and that means that it never completed. I thought it completed because I thought it was a complex inverted head or a complex head and shoulder pattern with a slanted neckline, which it ended up being because we ended up basically completing it and then coming back and retesting it. The neckline perfectly to a T, which means that the market was actually looking at this complex head and shoulder pattern this way the whole time. And I didn't think I would be validated. I didn't think we were going to get all the way up here yesterday, and we got up here and we spiked to this resistance to a T, and we even hit it again overnight. Now the question is, what do you do with the dollar Canadian at this point? And the answer to that question is, I have no freaking clue. I like this, like there's nothing for me to do now. I made my money in it, and now I'm kind of like, I guess I buy dips to 127, or, you know, you break above 129, and then, you know, we're going to 131. So I don't know really what to do with the dollar Canadian. I think more of this, the activity that you see in the dollar Canadian, and same with the US dollar Mexican peso. You know, whether or not we break above 19 in the dollar Mexican peso is probably more to do with like NAFTA versus anything else at this point, or maybe some risk aversion might actually push it higher. This is another situation where I was long pretty aggressively the dollar Mexican peso, made a good profit when it got up to like 38. I bought the descending wedge here, bought it on the breakout, added on the breakout, and I sold it like days early. You know, I made all the hard money, but all the easy money I missed. So, and that happens. I mean, you know, Andre expected to move up to 1870, but we actually went to almost 19. I mean, that is a huge move. That's a full big figure move in the US dollar Mexican peso, which is unheard of in a couple of days. So really big gains. And again, this kind of leaves the market stunned. It leaves myself, somebody who was looking to be long or who was long, kind of scratching my head trying to figure out what to do from here. And you definitely don't want to short it because it's so strong. So
great catch by you and Andre. Great catch on that one, Doug.
Yeah, I thought I was a rock star for a day, and then
Andre,
and Andre too.
Now you're like a roadie.
Well, yeah, I mean, well, the problem is that I thought I was you know, king poop for a day, and then realized the 2 days after that I really, you know, played it poorly. I could have made so much more money if I would have just stuck to my guns there. Anyway, a lot of big moves. So I think the dollar is going to continue higher. It's just you know, the question is how far is this consolidation or, you know, slight pullback are we going to see before the dollar continues its gains? And that answer I do not know at this point. So with that being said, I'm going to pass it over to my colleague Steve, and I don't know if Stelios is here this morning. Good morning.
No, Stelios came actually yesterday, just after you left, but he's not going to be with us today for sure. Andre is going to be with us though, since you mentioned him. He's going to come on in a few minutes. I'm going to make an overview of some things, and Andre is going to be with us so he can show us if he has any more great ideas like the USD MXN he had last week.
Great, yeah, probe him. Pick his brain, see if there's any more good setups. So,
Blake,
yeah.
Before you go, I want to pick your brain, because the first thing I wanted to show here, and I want your input as well, because we haven't had time to discuss it, is Dale asked you before to go on the monthly chart of the Aussie, because yesterday I was showing them again on the weekly, actually, that the Aussie might be breaking down, for a much lower move. But on the other hand, what is troubling me here? This is copper with the Aussie USD. We all know the very close correlation they've had. So at the same time that we have Aussie possibly breaking to the downside, we have copper trying to break to the upside. So who do you think is lying here?
What I would probably do, based on how the dollar is reacting across the board, is I'd probably sell copper.
Okay, so you think copper is lying here?
I mean, that would be my gut instinct, but I don't trade copper. But yeah, that's what I would be thinking. So
okay, mate. Thank you.
You're welcome.
Have a wonderful day.
All right, guys. Good luck today. Thank you.
You too, Blake.
Bye-bye,
All right. Bye-bye.
Hi, Steve.
Hey, Dale. How are you, my
Steve,
friend?
can you do one of our attendees, Narij, says he's been asking for a look on the Nifty 50, and we haven't answered him for days.
Sure.
Maybe we could start there and help Narij out.
Here's the Nifty. Still on resistance, so major level here. We have had seen that several days ago. Probably he wasn't on that webinar. Okay. Nothing has changed. I think this is a major level. If we break above it, Nifty becomes constructive once again. If we get rejected from here, we have to monitor then the nature of the move lower to determine if the move lower. Now, assuming we're going to get rejected from here, which isn't a given, of course, but if that happens, we need to see if the move that's going to unfold is corrective, in which case we will be looking higher once again, or if it's going to be impulsive, in which case I would be looking for a move down to 9,700. So that's my view on Nifty. Bottom line, we should know very, very soon, because we are exactly on a major level. So I think within this trading week, we will have a better idea of what's about to happen with the Nifty.
Thank you, buddy.
My pleasure. So going back to what we were seeing, once again, copper is testing here major resistance. So this is a very well-defined zone. It's the 61.8 of the move lower. It's also this descending trend line. We've been attempting several times to break above it. We would need to see a daily close above 317 or 318 to get another leg to the upside potentially, as copper has been producing since it bottomed in 2016. We've been seeing moves to the upside, then some consolidation periods, and then rinse and repeat. But we know how well correlated that is with the Aussie USD, and we see that the Aussie at the exact same time is looking like it has been broken to the downside. Of course, for example, on a weekly basis, we don't still have a weekly close or whatever, but I said many times that the 7640 is a major area of support. It's a triple confluence of supports. We bridged it yesterday. For the time being today, we just seem to be consolidating. My opinion doesn't change, obviously, as long as we remain below it, and especially if we end up closing the week below it as well, and probably the month as well, since the month is also ending quite soon. I think that's going to be a major break lower, and that's going to be a bearish development, no questions asked. But on the other hand, as I said, I have to pinpoint that there is that divergence we're seeing with copper. So is copper trying to fool people at this point? Is Aussie and Kiwi doing that? I think we're going to know within a few days. Same thing applies with the Kiwi. Kiwi broke down from the range's bottom. We had said that the 71.80 area was an area of triple confluence. It was the 200 EMA. It was the bottom of the range. It was also the 38.2 of the move higher. So another triple confluence of supports. We just sliced through it yesterday like it wasn't there. We even produced some continuation today. So this area has a very high chance of acting as resistance from this point on, and only if we end up breaking higher by the end of the week and producing like a false break lower, I'm going to turn back to neutral. Until then, we have to respect the downside, perhaps for a move at least towards the 70 area. That's what I wrote in the weekend analysis as well, that if we actually, before we had that bridge, I wrote that we remain neutral unless we break below 71.80, because if that happens, then we should target the 0.70 area. And the second scenario is playing out here. So it is what it is. Now, having a look at the cross rate, which is the Aussie Kiwi, we're seeing the Aussie Kiwi break above this descending trend line. Obviously, this is a bullish development, especially if we close the day above it, which more or less confirms that we found some kind of a bottom there. Don't forget that the Aussie Kiwi had been is trapped in essence in a major consolidation here. We were approaching the bottom, and this reaction was a well-timed reaction. I mean, Stelios also had a pattern in play for it. We're breaking above it. If that happens, then I think the next area of major resistance is at 1.085. So we have some room to the upside. There's no question about it. And I'm saying that because this will help people time better. In which of the two currencies they would prefer to be short or long, depends on what they're looking for. Now, the Aussie Yen has also been rejected. We said it yesterday at the end of the day. Grega mentioned it, and I verbally said my point of view as well. Aussie Yen has been rejected from the 38.2, but I think the Kiwi Yen looks even better, because the Kiwi Yen got rejected from triple confluence of resistances. It was the 200 DMA, it was a 61.8, also a horizontal level of support resistance. You can see it here, and it has been moving lower from there. We're currently, striving to hold another area of support, but if we do break below that, I think that the chances for a move towards the lows once again increase. That would play out very, very nicely, especially since we've seen the Kiwi break lower. The element that is missing here to see some acceleration in the Kiwi Yen would be the scenario I was looking for, which calls for a rejection from this confluence of resistances here, the 50% fib and the broken triangles support acting as resistance this time, playing out. So if we do get rejected from here, which is an area I'm monitoring very closely, if you remember, I was mentioning that even when we were consolidating at around 107, that I kept reiterating that, in my opinion, another leg to the upside is a very high probability scenario, but I would want to see the 109 area and how it's going to react. So here we are, we're about to test this area, and for me, this is a very, very critical point in time. If we do get rejected from there, I think that the Kiwi Yen is one of the best candidates to actually break down even further and push towards the recent lows. Okay, so Grega mentioned it as a pair he likes yesterday, and I'm pointing out here that I agree with him. I'm of the same opinion, as long as the USD Yen confirms that theory. Ronit is showing a chart about the USD CAD. Let's have a look at it. Let me pull it up here. There we go. Let me, his USD CAD is in the channel, if you recall, C, yes. So from what I see, probably you're not a believer that there is a lot more upside left from here. I will tell you my opinion on the USD CAD, actually. I think that Aussie is wrong, says our friend here. So you believe that copper is right? Yes, I would agree with you. I mean, copper might be the one that's right. That's why they call it also Dr. Copper. But in order for that to be the case, I would really need to see Aussie reversing quite fast, and ending up the week above the 76.40 area. Otherwise, things become quite tough. Okay, now let's have a look at the USD CAD.
Dr. Copper has a few malpractice cases on its agenda.
That's true. Okay, so here's the USD CAD. Listen, two comments I have to make about this. First of all, I'm viewing this as potentially a channel, right? You can see that it's not perfectly, but it channels. Second of all, I have to say that 128 was a major area of resistance for me. We broke above it. So I have to say that I'm more or less neutral. Now, being neutral in the short term, and I have to say that I'm quite perplexed with many of the moves we're seeing in the short term, meaning that I would still, I mean, for my trading style, DXY as well, because Blake mentioned it before. I have to say that, yeah, the move higher in the DXY is, is quite strong. There is the potential that we're going to see DXY coming down and retesting this potentially broken triangle and producing one more leg to the upside. But as I was saying yesterday, in my opinion, the DXY is far away from confirming a major break to the upside. Can it move towards the 92 area? Sure, it can, even though towards 92.50. But I would want to see a move above that to then feel confident that a stronger rebound, perhaps towards even the 96.50 area, is unfolding, right? So the fact that what I'm seeing from the dollar is not conclusive yet. The fact that I'm seeing some things trying to break down, but they haven't confirmed yet on a weekly closing basis, etc., keeps me, I have to say, a little bit on the sides. I'd rather have more confirmation because definitely, it's this week is going to prove important to either confirm that we're seeing some big reversals, or that this was just a violent reaction and nothing more than that. So personally, I would like a little bit more confirmation to gain more conviction for you that are following. For those of you that are following the webinar for a long time, you know very well that there are times that I have very, very high conviction in things, and when I have high conviction, usually things work out. The way I look at the market. But in this case, I have to be honest. I'm still not sure what's happening here, right? So I have no problem waiting for a little bit more of a confirmation. Now, we have a question about crude. Here is crude. If you remember, I was adamant about it. I didn't think that the move lower, once again, is genuinely the beginning of something bearish. And this, if you go down to 4-hour chart, this looks like a bull flag, and we seem to be breaking above it. So I do think, and I would like to believe, that my ultimate target at 72, which is the 161.8, is going to be fulfilled. I'm really looking forward to that. I will be very actively looking to be short crude up there, but not yet. Today's candle already is an outside white candle, which points to the upside. Sorry, yesterday's candle was an outside white candle. Today we have a consolidation. We have a doji, but still I do think there is more upside left for crude. But I don't think we're far away from a tradable high for at least a stronger pullback, right? So this remains my opinion here. Crude and USD ruble is diverging. USD ruble is moving up. Yes, that is very true, and that might also be pointing to a high in crude being near. I have to tell you that I am along a quarter of a position already, the USD ruble, because this is what I was seeing. If you remember, I warned last week that I'm actively looking to be long. I was looking at this zone to be long. We touched that zone, so I've already bought some. I'm going to be adding to this position. I think this move to the upside that obviously ended by some kind of an intervention from the Central Bank of Russia, because it came exactly from the 65 area and it had all the characteristics of an intervention, is not going to be long-lived. So I do agree with you. USD ruble seems a good candidate to move to the upside, and the fact that crude, in my opinion, is not far away from a high should add fuel to that. Anyhow, let's give at least 15 minutes to Andre to show us what he's thinking about the markets here. Let me find him, and there he is. Making you a panelist, Andre, and passing you.
Hello, Steve.
Hey, mate.
Hello,
Welcome.
everyone.
Welcome to
Thank
the
you.
company.
Thank you very much.
Hello, Andre.
Hello, Dale. How are you?
So, Andre.
Go ahead.
So, Andre, in this period of, a little bit of an uncertainty, we're seeing the dollar trying to mount a rebound, but personally, I'm not convinced yet. And from what Gregor was telling us yesterday, he's also not convinced yet that this is a true long-term reversal.
Greg, wait, one more wave down, yeah. And I will not ignore that possibility, but I want to push your attention to this chart. I believe you are seeing my screen.
Yes, we are seeing your screen perfectly.
This is a chart that I published for our subscribers on ForexAnalytix, which I invite those who are here watching this video to join. It's the best platform that you may find in the internet and outside the internet, obviously. But this is a chart that I published earlier, February 20. So this is the completion point for the crab at 161.8. As we can see, the market has nailed the 161.8. So, and I have two questions, and just obviously I know your answers from both of you, Dale and Steve. Obviously, I know that you are already familiar with the concept and the behaviors, but I want to ask you one thing. What we have, in your point of view, what we have downsides, what we have in the bottom of the structure above the 161.8. Can you please tell our viewers what we have here?
Well, you know what I see, Andre.
Yeah.
The non-confirmation, the divergence.
So can we call it a double bottom?
Yeah.
It can prove to be one, yes.
It can prove to be one when yeah. Steve, when we validate a double bottom. And I'm asking you, obviously, I know that you already know the answer to this, but when we validate,
in this case, would be a break above 90.50, which we've already done.
Okay, so we are familiar with this chart. Okay, so this is a double bottom, and a double bottom is a reversal pattern in the daily. I mentioned it earlier on a previous webinar. So it's a very powerful behavior as a potential reversal on price. So we are trending bearish. We can expect just based on a double bottom, once validated, we can expect a reversal on price. So I was expecting two things at this point. First, the completion of this crab pattern at 161.8. It needs to pull back to the 50% retracement to complete the sequence, and the market has reacted well, has bounced twice, forged a double bottom above this level, and I still believe the market needs to achieve this level. So, but there are two ways to trade these double bottoms. I like to trade them once the market violates these. Actually, let's go into a live chart, obviously. Let's go into Dixie. So the market has already, as you mentioned before, the market has already violated that next zone here. So we have a close above the next zone, and the market has reacted and pulled back and pushed it back into the 61.8. So at this point, the market has forged another strong behavior for potential reversal. So I have already the 61.8 here. So the market has confirmed or validated the double bottom as a potential reversal, as printed a resistance above the neck. Actually, at that point, I was expecting the market to respect this small and not very constructive piece of structure previously printed in order to find a resistance here, and then I need a pullback to the 61.8. So here, the market has decided to print kind of not very linear neck or horizontal neck, but it's here. We can identify this as a potential heads and shoulder reversal, heads and shoulder. So obviously, I always all the time I validate a double bottom or a double top, and that will depend on the close price, or not on the close price. I'm sorry, the lower lows in this case, between those bottoms. I like to try to identify the next harmonics above. So based on these lower lows, and because the market has rejected to extend the 127 from the first bottom, so this is not the 127 extension from the first one, I like to consider this as a false breakout, and I like to extend this movement above to the 161.8. So I like to show you my next eventual projection for dollar. So it will put the price at 161.8 or at 224. So it's a huge level. It's a huge box where I can where I can identify the next eventual bearish pattern. But in the meanwhile, the market has also developed this head and shoulder, which can also provide us some different approach on a lower time frame. So as you mentioned before, we are already above this bearish structure. We are also, as Blake has mentioned.
You're looking for 92.50, right?
Yes, I'm looking for your levels, something around your levels, the levels you mentioned before, Steve. So I'm expecting to see the price retesting the broken neck of this head and shoulder formation, but at this time, in a lower time frame, if you go into 4 hours time frame, the market has already, similar as other dollar pairs, the market has already extended here.
The question is, Andre, let's assume that this hypothesis comes into fruition and we do get DXY pushing to 92.50. Yeah. Are you going to be treating that as the end of a corrective move or as the beginning of a bigger move to the upside? That's $1 million question there.
Yeah, it's $1 million question, and I never do that question to myself. So I search for some pattern that I can take advantage from. So I don't think too much on those process. Actually, I don't turn on my TV. I don't know, for 7 years. I just need the price action and the patterns to trade. I don't guide my trades based on any type of fundamentals. I like to get synced, but actually I don't guide my trades, and I base my trade on support my trades based on those.
No, I don't understand.
Yeah, I just need some. If I have some doubts about what the market will print next, I will wait for the next pattern. The next pattern will tell me what the market will do. Then, if the pattern will work or not, I never know. But we have some indicators that can help us to identify potential.
And that's why we also use, we specify a risk in advance, because things cannot always work.
So he's a lot like you.
Even the most perfect pattern in the most perfect conditions. If you search for, as example, for the bad patterns in a specific time frame, you will search a lot of them, and even with the most perfect pattern, even the most perfect pattern will fail. So.
We have a friend asking. We have a friend asking here if you have a specific point of view of what's happening with the USD CAD from here. So, is there some active pattern you're tracking for the specific instrument?
I was about to top down this list because I shared these charts among the ForexAnalytix team and community. So the market, I'm inside these markets. I'm holding my third portion of this position, and I'm trailing it. So I'm just holding the position. But we are now trading above the 200 media. I have no advanced pattern here at this point, and I can expect the one eventual cup and handle formation, but it's not the place where I like to search for them and to trade them or to take advantage for them. But we can try to identify this previous box, and eventually the market will.
It does look like it's bull flagging though, here on the 4-hour chart. So I do think that at least one more push to the upside is likely from here.
And we are now facing some bullish hidden divergence also. It's a lower time frame. It's not so relevant, but it can push the price into a new high, eventually respecting the previous highs of this previous structure here. well, 61.8 also the second target by default for these patterns for the cipher pattern, usually printed at 78% retracement. They decided to extend it a few points above and then rally above. So this is, at least in terms of harmonic trading, I have no decent, let me just measure this extension here, but I believe we are already trading above the 224 extension. I'm not sure why I'm not being able to. Yeah, we are already trading right above the 224. Not relevant at this point. At this point, I can wait. Well, if a pullback here, Steve, I will not be surprised. No, a small pullback and a new high again. Very similar.
It looks like
very similar what I'm expecting on Dixie, since we are trading above the previous structure. So a retest to the previous next zone of this reversal head and shoulder, I will not be surprised. We have this bearish shark printed at 224 also. Small pullback event, those usually ends up as a 5-0 pattern. Let me try to identify that those patterns. So usually we end with a 50% retracement with a 5-0 pattern that usually trends higher after the.
Andre, is there any ticker at the moment that you're seeing ready to begin a new pattern that you have high conviction for? So yeah, I know that some of the things you were already expecting to happen have started happening last week, so they're already underway. But the question is, are you tracking some kind of a pattern that is about to get triggered but hasn't triggered yet, and you feel good about?
Yeah, I share the vision with Blake related with the yen pairs. I share the same vision. We are now trading and fighting the 200 media average. I do expect, I was expecting some kind of reaction at 160.18, 224. So this is my range based on the harmonic concept. So I will wait for the best risk reward opportunity to engage it. So at this moment, this is not offering me at all a friendly risk reward for engagement at 160.18, and then we need to define some criteria. So I need to wait for the price to develop and to push back into the 224. So I'm holding a buy position. So I bought also the breakout of the 3 drives pattern. So we bought the market here, and so we are holding this position. We are already at break even because I have achieved the 38% retracement from this bearish major movement. So at this moment I'm break even. Actually, I set my stops actually a few points above, just to assure that I will not lose this trade.
You're seeing a potential for 111 almost to print this direction,
to be specific, 110.63. So this is my 224 is my range. Eventually we will be testing this previous structure support.
You know, that's an interesting number. It's very close to our guest yesterday, Prashant Kumar, who uses point and figure, and he had about a 110.80 target off his X's and O's, and I'm not talking tic-tac-toe. So interesting confluence there, Andre.
But note that this is a bearish pattern, but again, it's a shark, it's a failed breakout. Usually those failed breakouts here, those failed extensions will print again the 5-0 pattern. And
I like sharks better than crabs because, Andre, crabs itch too much for me.
Yeah. you need to try. You need to come to Portugal, Dale, and to try our best shrimps here. I invite you to do so.
All right, buddy.
But just a note, because I just want to cover just 1 or 2 more pairs here. But note these shark patterns usually will push to the 50% retracement, and then we can try to copy paste or to reply the same movement into the direction of the previous direction. So we expect a 50% retracement, retesting the previous structure support or resistance, I'm sorry, and then a new high. Obviously, there are a lot to to break. Until there, we need to break the previous structure and then a new high, and we have these previous structure highs too. So this is my 2 cents on dollar yen. Let me just, because you mentioned also Aussie versus New Zealand. Also, another setup that I published on ForexAnalytix. Most of them, they are all there in the section, harmonics section. Obviously, you will find all those harmonics inside the platform. So this is another very strong pattern. It's a cipher and at confluence with the 161.8. We are now facing the structure, the trend, the bearish descending trend line structure, but based on the indicators that I have at this moment at my disposal and the information that they share with me, I will expect a 38 retracement as a minimum expectation. 107 is my minimum expectations for Aussie versus New Zealand. If it will happen or not, I'm never sure. But based on history,
I'm looking for the red line you have there for 1085. I think it should act like a magnet.
Yes, it's previous structure supports, previous structure resistance here at some point, some pressure zone here also. Nice.
By the way, Andre, I have an idea. Since it's interview time and people have some more questions for you. You want to join us tomorrow for 15 minutes at the end as well?
No problem at all. No problem at all.
Thank you. So
thank you very much. All the best for you.
Great work. Good stuff, Andre.
Thank you, Dale, once again.
And thank you, Steve. And Kirk Spano, stand by. I'm going to make you the presenter. Looking forward to hearing you. You're one of my favorites. And I'm interested in getting an update of what you're thinking here. Congratulations on your oil call. It was spot on. Hi, Kirk. How are you, buddy?
Good. Can you hear me now?
Can hear you now, and I see your little article here. The last great secular oil bull market has begun. You're way ahead of the curve, man, in the $40 neighborhood, and here we are at 68. So why don't we start there with the oil, and also perhaps tied in with what you were looking for geopolitically. Now that things, just a thought I have that things quieting down on the North Korean front would actually make it easier instead of having two hotspots, because you're looking for the hotspot in Iran. Quieting down North Korea situation actually makes it more feasible, doesn't it?
Yeah, and we talked about that way back in October, I believe. I said that the North Korean situation is kind of like a pimple on an elephant's butt, and it would take care of itself somehow. It would resolve. And that's what's going on right now. Of course, you know, there's always uncertainty there, but I think the pivot towards the Middle East has been going on since January, when President Trump indicated that he probably was not going to renew the Iran nuclear deal again come May 12th.
Okay. All right. So not, and does Bolton seal that deal?
You would think, right? Because he's an uber hawk on Iran, and
he's the neocons that you were talking about before they were in Trump's cabinet that that have been planning and pushing for this for years. So when I heard his appointment, I thought of you. Any idea when you think something like this could happen?
Well, I think that the sanctions are going to come off, or excuse me, I think the sanctions are going to snap back on over the summer. Okay. So when President Trump does not certify the nuclear deal in May, which the 12th, I believe, I think the markets are going to have a pretty sharp reaction to that. And then there's usually about a 6-month period before the sanctions fully snap back in place. And the thing that a lot of people have wrong, and I wrote an article about it, which we'll touch on in a second. So I'm just going to fly through some of the things. But the rest of the world has very little choice. If we put the sanctions back on, Europe or whoever else is out there can't say, well, we don't want to follow the Americans on this, because if they don't follow the Americans, there's a banking regulation that says, hey, if you do business with Iran while we have sanctions on them, you can't use our banking system, our international payment system. So there's a very real possibility that up to 2 million barrels of oil per day come off the market from Iran within about 6 months. Now, I think there will be negotiations, and we'll see what those, how those bear fruit. But the situation.
So you're talking about the SWIFT system that they would be, and the Chinese and Russians have been working on developing an alternative to the SWIFT in case these things happen, right?
Yeah, and it'll take, and the futures market over there for oil in China has something to do with it. But the reality is, do you trust the Chinese and the Russians? So to think that they're going to somehow have a viable alternative in the global monetary system is pretty far-fetched. Okay. Plus, Saudi Arabia is a linchpin here, and they're not going to start helping the Chinese make the yuan more global until Iran is put in place. So you have the United States and Saudi Arabia and Israel aligned against Iran. They have all the cards. They're playing with 4 aces. China and Russia have to allow what's going to happen eventually in Iran to happen. And on the ground in Iran, you have to realize the Ayatollah does not have massive support among the people. They all kind of just wish he'd go away, and they're trying to wait him out because he's like 17,000 years old at this point. What is he, 85, 89, something like that. And they're just hoping that he dies so that they can, at that point, change the way government functions. I don't think most Westerners realize that the Persians have a very democratic heritage. They're very westernized. They're very educated. They're not, the stereotype that I think some of the people in our society have. And you have a population of clerics there who believe in a separation of church and state. And that never gets played up in the news. You can Google that and find all sorts of statements from people saying, look, the government and the church, the mosques and whatnot should be separate. And I think that day is coming. It's just a matter of whether or not we have to use force.
Okay, Kirk, I have a question, and I'm just going to take the screen back. Yeah, we could still hear you. And it's about the oil shares. I just want to show a few, and I'm curious how you navigate. Here's one that you've been talking about, and how do you navigate when oil shares act more like stocks, like they did in February, and recovering with the market since that low? Do they eventually separate that even if you have pressure in the market, that they could still withstand it and trade on their own? Because you look at what oil has done, and then you look at ECA, or you look at, I'm not saying that it looks bad now, but you look at some of these others, Kinder Morgan, okay, you look at this, I believe is an ETF, XES, looks better. But a lot of these oil shares acted more like just part of the market that suffered with the market. So how do you navigate the waters if you're bullish oil, with oil making new highs, and all we're doing is getting recoveries in these particular shares?
So the stocks and the price of oil clearly have not been correlated in the shorter term, right?
Yeah.
That appears to be changing in the last 2 to 3 weeks. So if you look at all those charts that you just pulled up, the last 2 to 3 weeks, the shares started to move.
Right.
And they've crossed some important resistance levels.
Right.
I think that we're right at the start. Now, if you would go back to my screen, you'd see that I did write that article right. I mean, I think I might have hit the low day I wrote that there's a new golden age for oil stocks that is about to begin. And if you take a look at the bottom of all those charts that you just had up, March 29th is when I said this, and within days the oil shares started going up. So I think it's just a matter of sometimes you have to wait it out, right? And there is a lot of negative narrative about oil and oil stocks. I think the millennial investor is hurting this a little bit. I think some of the divest fossil fuel movements are hurting this a little bit. But ultimately, the algorithms and the big money is going to dictate this at some point. And I'll show you a chart here in a couple of minutes of a stock that I think people are going to get surprised by finally. There are divergences that are just beginning right in the last few weeks. And you have money flows going into these stocks, but the prices have barely moved. So they're still oversold, not as oversold as they were, but they're still oversold. But the money flows are starting to push into these stocks. So what happens? At some point, you get chasing. When does the chasing occur? I think after the earnings come in this quarter and next quarter, and people see, holy cow, look at the cash flow that these guys have now that oil is back in the 60s and 70s.
Okay.
So those are your breakouts. So, we just flew through a whole bunch of things. So I do think that the oil stock breakout is coming. I talked about oil prices, inflation, and the Fed today. Threw out a couple of stocks for the bull market if you're a dividend investor. Talked about why I don't like Chevron and Exxon. A couple of things with the Fed here. The wild card with the Fed is that they tighten too fast, right?
Okay, so that's a recent article. I think the headline was how the Fed could affect your retirement funds. Right?
Yeah, that one wasn't mine, but I talked about that the Fed is making two huge mistakes, and if they tighten too much and the dollar suddenly surges, you could have a situation where they cause a recession. So it's not so much the dollar getting stronger, putting a lot of pressure on the price of oil. It's the dollar getting stronger and slowing economic growth, which would cause demand for oil to go down. So that is what we have to watch out for.
Tug of war is supplies getting tighter, and the only thing that could disrupt this bullish scenario is the global economy weakening too much, which will stifle demand.
Correct. And I'm not a real confident guy in Jerome Powell, but I think that there will be pressure to bear on him at some point not to tighten as much. Neil Kashkari is out there talking about it in the press. So we'll see what happens. Ultimately, I do think this resolves positively for oil stocks. I actually wrote an article that I don't have pulled up. I think the S&P 500 is going to run to around 3,000 here in the next year. And then I think bad things happen. We haven't had that euphoric rally yet. We got a taste of it in January, but we didn't get the full cake. We got a little slice. And we still have to get that melt up that Jeremy Grantham has talked about and a few others. And then you should probably be worried. But maybe I'm wrong. Maybe the Fed tightens too fast and we never get that euphoric rally and we get a small recession instead. The thing that I think that people are overstating are the negatives from potential trade policies. At this point, everybody's talking about the negatives of trade policy. I think that tells me that if you take a contrarian view, you should expect positive surprises instead. I'd be surprised if you don't see an energy deal with China. That is a big step towards reducing the trade deficit by around $50 billion with them. They've said they would reduce the trade deficit by $50 billion. Now it's just a matter of how and how fast. Okay,
so there could be, I think some sanctions are going into effect, and that's one of the reasons Merkel and Macron are visiting besides the Iran nuclear deal. You think there's enough time when it comes to China for there to be a negotiated settlement so that tariffs don't begin. I don't know how far away we are from implementing.
Right. I think that the reality here is that, and I said this when President Trump was elected, everything should revolve around his view on oil and the Ayatollah. He wants the Ayatollah gone, and he wants the United States to be a big exporter of energy because that is short-term immediate money for the nation. And if he can get marginal improvements in the trade agreements and cut a deal with China, which is the biggest importer of energy now, then he gets all these marginal wins, which he'll take because, you know, with President Trump, a marginal win is the biggest win in the world. So, you know, that's just how it'll come out in his tweets.
Well, you know what? Maybe a foreshadowing of it would be what the EU just did with Mexico the other day, Kirk, where, you know, bilateral and almost all goods are tariff-free.
Right. And I'll tell you what, I can see the United Kingdom coming into NAFTA at some point. So, you know, there's a lot of different trade deals that are out there, and ultimately, you know, I wasn't a Trump voter, but I'm watching him with an open mind, and although he seems like that crazy uncle who tells dirty jokes, you know, I can't argue too much with the economic policy at this point unless his Fed chairman screws things up.
Got it.
So,
all right, so I don't know where you wanted to go next, but when I was tweeting about you coming on, and the yen is very strong, weak, U.S. dollar yen being strong, you're talking about eventual collapse of the yen, and you were saying maybe it's already started, but you have a lot of conviction that that's going to happen. How does that play into the whole scenario you've been talking about with the economy and oil?
So I believe that the next crisis begins somewhere internationally. And I think that the two most likely places that it begins is in Japan or in the European banks. So how long does it take? How long can they string things out? How long can they kick the can down the road? I have no idea. I can tell you, you know, this is a Buffett line. I can tell you what's going to happen. I can't tell you when. And I know that Japan is going to hit the wall at some point. And unless the European Union really comes together on fiscal policy and monetary policy, and they work out common sense ways to help the smaller, weaker economies, you know, things that aren't in any way tied to tightening, you know, the European banks will have a problem down the road. I mean, we almost had a crisis in the European banking system this year already. So we'll see what they do. So it'll come down to actions and policies in Europe. In Japan, I don't think there's anything they can do to prevent what's coming. I'm on board with Kyle Bass on this one. I was, you know, talking about this years ago, and when I found out that he saw the same things coming, you know, it was nice to know that somebody like that is saying, oh, this guy's probably got it right. But you know, when does Japan hit the wall? Who knows? I don't think it matters in this particular case. I would be more worried about it after the Olympics in 2020. Between now and 2020, I think they're fine. After the Olympics, that's usually when a country hits a big recession, and that could be the trigger.
Oh, interesting. So South Korea should be entering a recession now, right?
Well, take a look at them. Yeah, they're not doing that well.
Yeah.
You know,
okay,
and they had a rather successful Olympics. You know, countries overspend on the Olympics, and they get that sugar high while they're building. Then all of a sudden, all that building is gone.
Brazil was already in a crisis, and it deepened after the Olympics.
Right.
That's the example. Okay, so to me, it seems like your highest conviction about everything we've talked about is the accumulation of oil shares for the last bull market. Now, you know, I talked to a lot of people, right, Kirk?
Right.
And you know, and I know who's pretty good. And one of the guys who I think is, you know, has a great track record in forecasting was talking about $75 being that level being kind of a sticking point, and that's going to tell the story after we get to 75 about what's going to happen. But he believes if we clear 75 and the wave structure is positive, that he's actually looking for us to take out the highs of 140 before this is over. Do you think that's possible?
Yep, absolutely, especially if there's conflict.
180, I think he was talking, 180 crude.
Yeah, if there's a conflict in Iran, for sure. But you have to remember that Saudi Arabia has a lot of excess capacity. And there's a bunch of people running around saying, oh, Saudi Arabia is running out of oil. Baloney. You know, I know people at Halliburton, Schlumberger, Total. Saudi Arabia is not short on oil. If they want to crank up production by 2 to 3 million barrels a day within a few months, they can do it. And if they really wanted to invest in some of their newer finds, within a year they could be pumping out another 2, 3, 4 million barrels a day after that. So what we're looking at is a manipulation of the oil market. First, they crushed the long cycle competition, right? The deep sea drillers and the oil sands just aren't investing anymore. That created this situation where now we have this run up on inventory coming down. What would push the price of oil through that $75, $80 mark? Punishing Iran, making them take hundreds of thousands of barrels of oil off the market. That would push the price up. After the price gets to a level they want, then Saudi Arabia starts pumping and they become the marginal supplier again. So I would say that your biggest winners from oil rising into the 80s, because it's certainly going to do that if we cancel the nuclear deal, are going to be the American shale players and some of the Gulf players, but in particular the players in the Permian. And then you're going to have Saudi Arabia, because they're going to be able to spin off 10 or 15% of Saudi Aramco. It's not going to be 5%. It's going to be way higher. They're going to spin off, I think, about 15% of that company. I think China's going to buy a share. I think India's going to buy a share. I think you're going to get a conglomerate of buyers to buy more. They might even sell 20%.
There was talk, I think about a month ago, that China was going to take it all.
They can't take it all. The Saudi Arabians would never sell it all, but I mean, there certainly could be deals, and that would go back to what we talked about earlier, the globalization of the yuan. So once Iran is put into check, all these other things start to go boom, 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 boom. That doesn't mean there'd be an oil crisis, because Saudi Arabia knows if you crush oil demand, that defeats everything else they did. They want the price of oil between 80 and 100. And they have the ability to supply oil. Even if Iran has 2 million barrels come off, they can replace that within months. So it's not like we're going to have this dramatic shortage. Plus, as the price of oil goes up in the 2020s, right? Let's suppose we still were rising past 100, 110, 120, 130, 140. As that happens, what do consumers do? They change their behavior. There's already a Toyota hybrid Camry out there for less than $1,000 more than an internal combustion Camry, and it gets double the mileage.
Yeah.
So is that the top selling car in the world? Maybe it's one of the top selling cars. So do Camry buyers who are loyal? I've become a loyal Toyota guy. I was always, I had a Cadillac, I had a Buick. I love those cars, but for reliability and price, at some point you just make rational decisions. Say, well, I'm not buying a sports car, so what makes sense? And Toyota.
Well, you're not trying to get as many chicks.
Oh no, that's not true. I'm trying to get chicks. But and anybody who knows me here knows, that I am a very eligible bachelor. So, and I travel. So if there's any great traders out there that happen to be 30-something-year-old women and are single. Look me up.
Okay, Match.com here.
Yeah, look me up.
All right, so Kirk, another outstanding interview. Anything you want to wrap it with?
Yeah, let me give you a stock pick. I haven't given you a stock pick before. I'm going to give you something that I think is going to break out, and that you can use options to make a lot of money on. So, Gundlach talked about being long XOP. So I had that article comparing XLE and XOP. I'm not real high on the majors. I think they have too much overhang, too much legacy debt and problems. XOP is the way to go. Equal weighted, more shale players.
Is that an ETF?
ETF, yeah. So if you
Okay.
just want exposure, I own Leaps on this. Gunlock got behind it at the Sona conference, so I feel good about that. These are the companies that are in there. And this is the company that's not on that list, I don't think, but I like it. Chesapeake Energy.
Oh, I was looking at that.
Everybody's
I
whipping
thought
boy.
there might be one more push down, and I was, everyone I talked to about Chesapeake, it had a little heartbeat in the last month or two.
Yeah.
They go, yeah, it's in a void because of all the problems the company has. And, the guy who was it that died, who crashed his car.
McLendon.
Right. So you like it. And I know you do due diligence on the financials of a company, right?
Right. And so I have been following Chesapeake since, I don't know, well before the financial crisis. And, I don't even remember when they went public, but it was during my career sometime. I had a great uncle who worked over at CBOE, he had a seat. And he taught me about Chesapeake. He says, yeah, we just used to trade the hell out of this one. And I think that you're starting to see, you can add more lines to this chart, but you can tell what's happening here. Look how it's tightening up.
Right.
Okay. Look at the money flow. I like shaken, whatever it's called.
Okay. That shows accumulation.
Look at that.
Yeah, a lot of it.
Still oversold, but smart money is picking it up. But the stock price hasn't moved. It's just consolidated and getting tighter and tighter and tighter. When this breaks out, it's going to break out on news. And this is what the news is going to be. They're going to sell off another hunk of land, and it's going to be something people don't expect, and it's going to be worth a lot more than people thought they'd get for it. And I have 3 candidates for what hunk of land they're going to sell. It's not important to this discussion which ones they are, but they have a natural gas asset that they could sell down off the coast. They already sold one. They have another one. They have a couple of oil assets, including the Eagle Ford. They're here, so I'm telling you what they are. I think that they could sell some assets and get some big numbers now that the price of oil has gone up. And the reason the natural gas, and they might sell too, the reason the natural gas assets are becoming valuable again is because I think everybody knows that the LNG that's getting exported is a big deal. And the oil that's going to get exported is a big deal. You remember you have the port down in Corpus Christi that just got, I don't know if they're quite done yet, but they're going to be able to send out the super tankers now, the real big ships. And that's a lot. That's 2 million barrels a day per ship. So
you have any reasonable, objectives or targets? Looks like once we get through 380, it's going to look pretty good. Do you have any?
Yeah,
what are you thinking?
I think it's going to get to $7 or $8 a share in the next year and a half, and here's why. Chesapeake Energy is a binary event, right? Either Chesapeake Energy overcomes their debt and they break out on cash flow, and Goldman Sachs says that they're on the verge of being a cash flow machine, and I agree with Goldman Sachs on this one. However, if the price of oil crashes and natural gas stays in the 2s, these guys would get to a point in about 2020 where the debt becomes too much. So what I've been doing, since I look at it as a binary event, I don't buy the stock. I just buy the leaps. Because by January of 2020, we're going to know, is Chesapeake Energy off to the races? Are they going to double and triple their share price? Or are they headed for reorganization? They are completely dependent on the price of oil and gas. And that's all there is to it. So they'll sell a couple of assets, they'll put themselves in a position to win, and if the price of oil goes up and they can sell off the rest of their oil assets, they come out of this in 2021, 2022 as a nearly debt-free major natural gas producer over in the Marcellus and the Utica. If the price of oil and gas collapse again, they're toast, and they have to repackage everything.
So let me ask you this. When you're buying leaps, do you look for liquidity in the strike, like open interest gives you an idea, or
Right.
You don't care?
Yeah, I want some liquidity, and I don't, so I own some of the 2s, right? I'm a couple hundred of these,
Okay.
but then I own a few hundred of these, a few hundred of these, a few hundred of these, because you want to get different exposure depending on your risk tolerance and how much of a home run you're trying to hit, right? So you got some of these guys.
We're talking about it going to $7, and that's where all the open interest is. So if
Yeah.
they get over $7, they would squeeze the hell out of those people, because you know most of them are writers, not buyers, correct?
You would think. I don't know. I don't know.
Yeah.
Is this people speculating because they can only have to pay 20 cents for these things? I don't know.
Yeah.
I don't think people are selling these calls.
Yeah, you're probably right. Yeah.
You know, they would be selling those calls. They're selling these calls.
Right.
You know, but you know, take a look. You know, in these numbers, none of these implied volatilities make any sense.
Yeah.
So, you know, I spread it out. You know, I view these leaps as relatively safe. And then as you get into here, you know, you're taking more risk, because if the price of oil, you know, if the price of Chesapeake only gets to 5, you're SOL.
You're toast, right?
But on this one, you've doubled your money.
Right.
You know, so I spread my leaps out, more here to less here, but I do buy a couple of these down here because, hey, what if it does go to 9? You know,
Right.
then you might as well hit the grand slam. But I think that as a binary event, you get good leverage on your money in these options. People, these are not retail buyers buying this, right?
Yeah, you're right.
These are pros buying these. Somebody who knows something, and what they know is what I just talked about. This is a binary event with them. Price of oil stays high. If we're right about the price of oil, if they really sell off an asset or two that are worth billions, they get to the point where their interest expense isn't that big of a deal, that they push out their debt by paying some of it off, because they don't have really any debt to pay off in the next year and a half.
Okay, that's their window.
Yeah, that's
what a great interview, and you got real specific with us this time, Kirk. Thank you so much for, you know, laying it out there on the line instead of if this then that, or if that then that. You're showing us where your skin is in the game. So really appreciate that transparency.
All right, you guys follow along online. I've got more to say about oil over at Seeking Alpha.
Okay.
I think the next article is going to be 2 weeks to take off, because when he cancels the nuclear deal, that's pedal to the metal time.
Okay, and people could follow you on Twitter at Kirk Spano, just like your name, and you don't have a website, do you?
Well, sure do.
Oh, that's right. You
sure do.
Right.
Let's see here, under mine. So my website here is Fundamental Trends. I don't blog very often. You're better off following me at Seeking Alpha.
Okay.
If you want to subscribe at Fundamental Trends, and use the code 200 off, 200 like the number off, and you get the first year for $200 off. It's only $199 at that point.
Okay, and you have your Match.com photo up there.
No, my Match.com photo is me with like painted on abs and stuff. Yeah. It worked pretty good, and it worked pretty good last year. So I'm actually training for a 100-mile bike ride. So
wow.
Hopefully I have real abs by the 4th of July.
So Kirk Spano, marathon man on the road and marathon man in the oil market.
Yeah. Hey. What? By the way, make sure you follow me at Seeking Alpha, because I'm going to put a blog up soon. I'm going to be in Las Vegas for a little over 2 weeks in June playing in the World Series of Poker. But the 2 Fridays that I'm going to be there, I'm going to be meeting with investors. And depending on how many people get a hold of me, I might rent a room or something. So if you happen to be in Vegas during the World Series of Poker, it'll be June 14th and 21st or 15th and 22nd, whatever those Fridays are. I'll be out in Vegas meeting with people.
All right. Well, I recommend you start playing a little Kenny Rogers, the Gambler, and get yourself ready for it. All right, buddy.
I've won 2 seats into that tournament, so
wow.
We'll see. This might be the year that I am officially a very bad poker pro.
Okay. All right, Kurt.
You're good amateur though.
You're a very interesting guy, and you do have excellent insights into the market. So I appreciate you continuing to come to face and edify our community. Thank you very much, Kirk Spano.
Thank you, and I'm going to keep coming back because I love some of the stories about crabs versus lobsters that you tell.
Thank you, partner.
All right, take
everyone. Care. That's our Turnaround Tuesday. That's Kirk Spano, and I recommend you follow him. Keep an eye on what he talked about in the oil. And let me just take a quick look here, what the markets are doing. So we're getting a nice move in the oil shares today, and Aussie Kiwi 83 last. See everyone tomorrow. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. I count being able to hang out with you guys and talk to guys like Kirk as a blessing in my life. See everyone tomorrow. Adios.